Good morning, everyone.
Good morning.
Are you here to make money?
Yes.
That's good to hear. Today is September 28th. And a year from now, I hope you'll be at least 50% richer. Kaya ba yan? Promise, promise. Anyway, I'm so happy to be here because this is a conversation that's long overdue between our clients and BPI Securities. And before I begin my talk, I just want to share with you a story. About 4 weeks ago, I met a client, and he was an OFW based in the Middle East. And I was very encouraged by his story because he started investing in the stock market about 4 years ago. He set aside 50% of his salary to invest in the stock market. A year after, he made his first million. 2 years later, he made his first 100 million. And now he's worth more than 500 million pesos. That's a true story, and I didn't make that up. I really hope that in this room there'll be more mega millionaires 12 months from now. But I have a good news and a bad news in terms of where we are in the stock market. Let me start off with the bad news. How does it work, by the way? Okay. First of all, the bad news is that it's not going to be a straight line from here. The easy money has been made in the stock market. The good news is it doesn't matter. You can still make more money in the stock market. All of you are here because you're trying to find out whether it is too late to invest in the stock market. Because if you look at this chart, we've come a long way from the Asian financial crisis to the dot-com, to 2005, to the global financial crisis, and to today. Boom na boom. That is a theme for the Philippines in 2014. And I say it's actually more fun investing in the Philippines because there are so many investment opportunities. But I want to highlight the risk in the stock market over the next few weeks. Foreign funds will continue to decide the near-term outlook for the Philippine market, and we cannot hide from that. There's a risk of Bernanke basically switching off the faucet in the States over the next few weeks or months. And people are saying that it is in the price. And I will argue it's not in the price. We have one of these people, and I keep on telling investors that Bernanke will determine whether it's going to be a Merry Christmas for all of us, or it's going to be no lechon on the table on Christmas Day. You also have to know that primarily Keqiang of China will determine whether the Lepantos of this world, the commodity companies of this world, are going to make money for you. So we have to follow what these guys are saying because their whispers will be heard globally. India is also important. It's coming into the picture now because India will need to manage their currencies very well. And that's the reason why, I think a few weeks ago, you saw peso depreciating quite rapidly because India didn't manage to contain the depreciation of the currency. So again, these are risks that you have to keep in mind when looking at the stock market. Is the Fed tightening already in the price? The answer, not fully in the price. In 1994, when the Fed switched off the liquidity faucet, the market fell 24%. And that's basically, in today's numbers, that's 5,800. We reached that level about a couple of weeks ago and moved back to 6,364. If Bernanke speaks again over the next few weeks, there's a risk of going to that level again. So for those who are not in the market, there is a great buying opportunity that will open up in the Philippines. Keep in mind, foreign investors will continue to determine the near-term movements in the stock market because we're seeing about 2 billion on average funds flow into the Philippines. And that money can also get in and out of the Philippines. But the good news is, 1994 was when we saw an inverse correlation between the bond yields and the Philippine stock market. If you look at the correlation between the stock market and the bond yields thereafter, it was actually a positive correlation. Because the increase in the bond yields signaled a very strong US economy and potentially a global economy. So there is a potential for many of us, hopefully including me, to make money as well in the stock market. The good news is, and this is something I want to emphasize, we are in the middle of what we call the economic super cycle, the economic super wave. For the young people like me, but some of you who are here as well, we've never seen this happen in our lifetime. A GDP growth of at least 7% over the next few years. It's a possibility. It's not just a hope. We are in a golden era, and I think all of you will agree with me that more than any time before, we have a very strong level of gross international reserves, and that's growing. Our government is very healthy, and very importantly, the banks are very healthy, which means there's going to be continued liquidity in the market, especially today when the banks are scrambling to look for opportunities to lend out because trading gains are now whittling down. The difference between us and Indonesia, and this is a very important differentiation, is that we've got two very strong industries, so to speak, that are here to stay. The BPO and the OFWs, remittances. I am very sure that many of you would have relatives, friends who are working in the BPOs, and they're telling you that they're continuing to hire. And many of your friends or families probably are still receiving money from your relatives abroad, and that's continuing to stay. On average, the BPOs bring in a revenue of about 20 million US daily. Remittances is about 60 million US daily. That's a big number. The topic of this conference is consumer is king. And the reason why I'm very positive with the economy, and why I think that this country will see growth of about 7% over the next 2 years, is that consumption is driving this economy, and that is here to stay. 70% of GDP is driven by consumption. That is robust, that is stable, that is not something funded just by foreign money. The Filipinos are working hard abroad, the BPOs are growing, and more BPOs are actually being established in the Philippines. I was on a plane on my way to New York over Christmas, and I sat beside somebody who was putting up a BPO in Cebu. Interestingly, I asked him, I said, "Sir, are you having a hard time looking for people who can speak good English?" And he said, "No, I don't need them." I go, "What do you mean?" "I just need typists." "What do you mean?" "There's a voice recorder already in the computer. They just have to type the word, and the voice will come out with the accent that you like." That's in Cebu. I'm Cebuano, so maybe my accent will have to be changed to make it more American. So basically, that industry is staying. 60% of GDP is services sector. That is here to stay as well. These two things are very important. This is what differentiates us from the era of the 1997 or pre-1997 to today. These two industries are staying. It's not like a fly-by-night industry that's going to disappear tomorrow. And they are growing. I'm arguing that basically the 5% GDP growth is sustainable. If you look at these charts, basically what you will see is that the Philippines are doing anything without any government spending, investment. You can actually grow potentially GDP of at least 4.5% or 5%. Can we grow 7% soon? The question is, I don't know what's going to happen to the PDAF, but theoretically, 7% is achievable in the Philippines. This is a framework for analysis in terms of the stock market and the economic cycle. The stock market basically prices in the economic cycle 6 to 9 months before. So at the stage of the market, the Philippine investors, or the investors in the Philippines, are wondering whether the 6.5, 6.8% is something that can be exceeded. Because if it's not going to be exceeded, everything is in the price. There's no upside. But if the Philippine economy grows above 7%, the stock market is going to fly, because more and more foreign investors are going to come in and invest in the Philippine stock market.